Hello, I'm Regina McCann-Hess, President of Forge Wealth Management, and welcome to our Women in Wealth series. Today, we're going to talk about 10 things you should know about bear markets. And it's been a rough year this year, so it's probably a timely topic. Even elite athletes need rest days to stay healthy. Sometimes financial markets need to reset from record-setting performances too. So here's what you need to know about bear or down markets. Okay, so number one, watch for 20%. Market cycles are measured from peak to trough. So a stock index officially reaches bear territory when the closing price drops at least 20% from its most recent high. Whereas a correction is a drop from anywhere, say, 10 to 19.9%. A new bull market begins when the closing price gains 20% from its low. Point number two, stocks lose 36% on average in a bear market. Now, by contrast, stocks gain 114% on average during a bull market. Point number three, bear markets are normal. They may not feel good, but they are normal. There have been 26 bear markets in the S&P 500 index since 1928. However, there have also been 27 bull markets, and stocks have risen significantly over the long term. Point number four, bear markets tend to be short-lived. The average length of a bear market is 289 days, or about 9.6 months. That's significantly shorter than the average length of a bull market, which is 991 days or 2.7 years. Point number five, every 3.6 years. That's the long-term average frequency between bear markets. Though many consider the bull market that ended in 2020 to be the longest on record, the bull market that ran from December 1987 until the dot-com crash in March of 2000 is technically the longest bull market. Now, a drop of 19.9% in 1990 nearly derailed that bull market, but just missed that bear threshold. Point number six, bear markets have been less frequent since World War II. Between 1928 and 1945, there were 12 bear markets, or one about every 1.4 years. Since 1945, there have been 14 bear markets, which is one in every 5.4 years. Point number seven, half of the S&P 500 index's strongest days in the last 20 years occurred during a bear market. Another 34% of the market's best days took place in the first 2 months of a bull market before it was even clear a bull market had begun. In other words, the best way to weather a downturn could be to stay invested, since it's difficult to time the market's recovery. Point number eight, a bear market doesn't necessarily indicate an economic recession. There have been 26 bear markets since 1929. But only 15 recessions during that time. Bear markets often go hand in hand with a slowing economy, but a declining market doesn't necessarily mean a recession is looming. Point number nine, assuming a 50-year investment horizon, you can expect to live through about 14 bear markets, give or take. Although it can be difficult to watch a portfolio dip with the market, it's important to keep in mind that downturns have always been a temporary part of the process. Point number 10, bear markets can be painful, but overall, markets are positive a majority of the time. Of the last 92 years of market history, bear markets have comprised only about 20.6 of those years. But another way, stocks have been on the rise 78% of the time. I know this year's been a tough year, so I thought these little facts may come in handy, but we are still going through some volatility, so stay close and reach out to your financial advisor with any questions, and just pay attention. So, as far as an action item, a good thing to do during a bear market would be to reassess your risk tolerance. Are you really sleeping well at night? If you went into the market, before the bear market hit, thinking, I feel like I'm not going to lose sleep if the market's down, 5, 10, 20, 30%. I'm going to be okay. And now you're having a different reaction to that. It may be time to re-look at your investment objectives and your risk tolerance. So that would be a great action item for thinking about during a bear market. With that, thank you so much for listening. I'm Regina McCann Hess, president of Forge Wealth Management. My website is forgewealth.com, and you can find me on Facebook, Twitter, and YouTube at Forge Wealth. On LinkedIn, you can find me at Regina McCann Hess. Thank you and have a great day.